Right, good afternoon and welcome to today's JSC Investment Challenge webinar. My name is Ralph Spears and today we'll be doing different methods of selecting shares, part one, and I'll be taking you through just one particular method where what you could as an option for the JSC Investment Challenge game. I need to make sure that you understand fully that this is purely for the game only, and I do not want you to go and try this in real life. I'm not a registered financial service provider. I do not have an FSP number and therefore cannot give anyone advice. So this is purely for the game only, and you can use it should you wish in the game, but this is not advice for you to go and buy real live shares using this method. You would need to go and speak to a financial advisor or stockbroker, and he would advise you on the right and correct method to use. There are two theme of thoughts when it comes to how to select shares. One is technical analysis and another is fundamental analysis. I'm going to be purely talking about technical analysis and something in particular within technical analysis. Technical analysis is all about charts, and charts basically give you a snapshot of how the company price has performed over a certain period. And basically the key assumption upon technical analysis is based on that everything that everyone knows or feels about a share, sector or market is reflected in the price. Prices move in trends. Once a trend begins, it tends to continue. There's no guarantee, but it tends to continue. And history tends to repeat itself. Again, past performance doesn't necessarily mean that it will continue like this in the future. So be very careful of looking at the price and saying, okay, well, it's going up, it will continue. The market changes all the time, and that's the beauty of the market. But today, that is really the focus, is technical analysis. And before I get into the actual method of selecting shares, I would like to just help you understand that trends is the direction in which shares is moving. Trends exist when the prices keep rising or falling over a period of time. A share price can move either upwards, downwards, or sideways. In upwards, you would have higher highs and higher lows, and that would be a trend, upward trend. And we like to say in the market that chart or graph would be bullish. And you can see by drawing a line underneath the price over a period of time, you can see how well the share is trending. There might be pullbacks, but over time the share is trending. In a downward trend, you have in lower lows and lower highs, and the share is falling. So you can see when a share is falling over a period of time, and it seems to at times continue to fall, as well as if it was going up over time, it continues to go up. And here sideways, it's neither going up or down, it just continues to move in between kind of a support and resistance line, and you can basically see that it's going sideways. There are a number of charts where you can go and look and see, okay, this company is going sideways. The next thing is sideways trend. Basically, as I said earlier, there's support and resistance at the top and the bottom that you can clearly see, and it just keeps on moving sideways over a period of time. It could be 1 month, 1 year, 6 months. That would be a sideways trend. It is not going up and it's not going down. To use technical analysis, you use different charts, and the reason I'm mentioning this is that when you go and actually try and explore this, you're going to have the option of using the line chart, a bar chart, candlestick charts, and even, for example, point and figure charts. Today I'm keeping it simple. I want this whole presentation simple, and we're going to use line charts, but you can explore other options. And my previous presentation, it talks exactly about the different types of charts. Now, the line chart, just to remind you, you have the price on the vertical axis and the dates on the horizontal axis. Prices are plotted and they're joined by a line, and it's much easier to see a pattern and see actually the trend as to what is happening. And here's just an example of you plotting it. And you can do this in class every day. You can see the price, go and plot it, or you can go and find a chart or company that supplies charts and that you can actually just monitor it online yourself. What I'm introducing you to today is moving averages. Some of you might have used them before, others not. And here is a simple concept that you can use and apply to the shares that you analyze. And just remember, this is purely for the game only. A moving average is an average price of a company over a set amount of time. A simple moving average, and there are different ones, is calculated by adding the company's prices, the most recent N time periods. And when I say N, you could put in any figure. It could be 10 days, could be 5 days, could be 20 days, it's up to you. And dividing it by N, again, and I use the word N because not to confuse you, but to say, you know, you've got the choice of how many days you want to look back over. So it's just the average, and it's calculated by taking the shares price every day for the past certain number of days. So it could be 5, 10 days, and then dividing it by 5 or 10. For example, adding the closing price of a company for the most recent 50 days and then dividing it by 50. The result is the company's average price over the last 50 days, and then it's calculation is done for each period in the chart. So every day you go and calculate the last 50 days. And then tomorrow you go calculate the last 50 days. What you're doing is when you calculate the last 50 days, every day, the next day, you'll be dropping off the last day, as in the furthest day from currently, and you would say you would leave that price because you've got the next day. So for example, over here, you've got a daily close in this box, a daily closing price of 11 Rand, 12 Rand, 13 Rand, 14 Rand, 15 Rand, 16 Rand, and 17 Rand. The first day, 5 moving average, you take 11 plus 12 plus 13 plus 14 plus 15. Those are the first 5 days. You divide it by 5, it gives you 13. That is the average price over the last 5 days. And you would go and plot this on your chart. The second day, as in the next day, you take 12, 13, 14, 15, 16. In other words, 12, 13, 14, 15, and 16. You're dropping off the previous figure that you used because you're only using the most recent 5 days. You divide it by 5 and you get 14. On the third day, you take 13, 14, 15, 16, 17, 13, 14, 15, 16, 17, and divide it by 5 again, and you'll get 15. And you go plot that on your chart. That is a moving average, a simple moving average. There are other simple exponential moving average, weighted moving average, and you can go and Google exponential moving average and understand it's just more weighted towards what's most recently happened. And weighted moving average, you can go and Google this and explore the different ones. But I want to keep it as simple as possible today and say we're going to deal just with the simple moving average, keeping it simple. You've got basically different things that you can look at within simple moving averages, the lengths and the time frames. So a short moving average of a 5 to 7 to a 5 to 20 period. So in other words, the last 5 to 20 days maybe. Medium term, you would opt for a longer. Moving average might be between 20 and 60, and long term you're looking at maybe more than 100 plus days. So we are playing a short-term game. You want to look at a short time frame, so you're looking, you can use between 5 and 20, maybe go up to 60, but you don't want to be too long. 100, and the most common one is the 200-day moving average, but it's very long term. But you can use this to identify trends. Obviously in this chart you can see the blue line is the price and the red is the moving average, and you can see that the trend has been going up, and then all of a sudden towards the end it started trending down. You've got double crossovers, and I'm going to show you that now, as well as price crossovers, support and resistance. So there is more than one thing that you can use and analyze, and different methods as to how you can select shares using these moving averages. So over here, the top one, the top left-hand block, you've got support. The line over there, the black line, this is using candles. The black line is the support of the share, and saying, or you could even say that it does not go below there. You can see it bounced off, and you play around. It could be a 20 or a 50-day moving average where the price keeps on bouncing off that line. as well as in a downward trend, the bottom left-hand corner block, you've got a downward trend where it continues, and you can see towards the end the actual price went and bounced and hit the line, the moving average, and bounced back down. And that actually is showing you that that's a bit of resistance. On the top right-hand corner, you've got a block there showing two lines, and that is the crossover, the double crossover, where you've got two moving averages. And I'm going to show you another example a little bit further where you can use that. And lastly, at the bottom right-hand corner, you can use it, moving average as one moving average, where you could say that when the price crosses through the moving average, you either buy or sell depending on what's happening. In this case, the price moved through the moving average and you would have sold because you can see it's falling, and you would no longer hold it. So if we looked at the crossover moving average, this is an example of every time the red line, the blue line number one is the share price. The red and black are moving averages. The red one is a shorter term moving average. In other words, could be, for example, a 10-day moving average, the price over the last 10 days. This one is a shorter moving average, so it moves quicker, it responds quicker to what happens to the current share price. The black might be, for example, a 20-day moving average, and therefore it's a longer term, or a longer in this time frame. So now you've got the let's say, for example, the 10 and the 20 moving average. When the red, which is the 10-day, moves through the black, which is the 20-day, you would then buy or sell. And you can see clearly that in June, July of 2007, the red line, the moving average, went through the black line negatively. It fell down through the black line, and therefore you would no longer hold that share. Then come 2008, the red line crosses back through the black line, moving average, and therefore it's giving you an opportunity to buy. You could use this simple technique to analyze shares currently and look for a short-term moving average. Every time it crosses through a long-term moving average, you could consider buying that company. Here's an example of NASPAS, and it's created a number of years ago, where I took chart paper and went and plotted the price of the NASPAS share. It is now sitting at probably 2,000 something rand a share. When I plotted it, this must have been in 2009, it was sitting around 150, 160 rand a share. Quite incredible. And here you can see a 10-day moving average, the red line, and a 50-day moving average, the blue dotted line. The black line over there in pen is the price. And when the red in March of 2009 crossed through the blue line, that was a buying opportunity, and it actually never gave you another buying opportunity the whole from March up until September, and probably a lot longer. And there was a nice buying opportunity. So these are the kind of charts that you want to look, and here's a nice way demonstrating that every day you can plot it yourself using chart paper. It's a nice way to learn and understand the moving average. Every day I would take the 10 days share price, the last 10 days, I would add them up, divided by 10. Take the 50-day, I take the last 50 days prices, add them up, divided by 50, and I would plot those little dots every day, and it would show you the direction as to which the moving average is moving. Now, that brings me to the end of the presentation. Very short, simple, talking about the moving averages. But what I would like to now go do is demonstrate to you this live on one of the share platforms. And for example, I've taken ShareNet, and you can use any different platform. This just is one of the free platforms out there. You can go and use a whole host of different platforms. And what you would do is you would type in the company name. For example, if we wanted to do Sasol, we type SOL, which is the short share code. You would click search, and then you would look under all the Sasol contracts there are for the actual original underlying share, which is Sasol Limited, and you would click on that, and then it would give you an option to click on free chart, Java chart, basic or free Java chart. You can only do this using Internet Explorer. I need to point it out, or Firefox. You cannot use it with Chrome. I believe with Chrome you're unable to download Java because this needs to use Java. So Explorer, Internet Explorer, as well as Firefox allows you to download the Java. So you need to click on that. If you haven't got Java installed, it would then need to download Java first before it's shown on your PC. Clearly, you won't be able to use it on a Mac computer because you're unable to install the Java, I believe. So once you've clicked that, you can click there, and this page will come up once you've got your Java. And so here you've got ShareNet, and these are the opportunity. You would type in the 3-letter code. So I've typed here, I'm going to do it again. I type AGL, and that gives me the Anglo share. And you can now select what period you want to look, maybe a year. If you want to look longer, 2 years. So you can look. So choose your time frame. Obviously, this is a game, a 6-month game. So we would probably want to only focus a lot shorter, maybe 6 months or 3 months. And here you can see a moving average of 45. When it's selected in white in the top, SMA stands for simple moving average. And you would go and take, you could choose what time frame. It can be, for example, a 50-day moving average, and it moves. If I wanted a shorter time frame, I could say I wanted a 15-day moving average, and you can see how it affects the actual movement of the moving average. But let's say if we kept it to maybe a 30-day moving average, you can see the blue line is the moving average. It keeps on moving depending on what you have. And what's nice over here, you are then able to see that in February it gave first a sign to buy, because it crossed. If you said when the price crosses through the blue line, I buy. So you bought, but immediately again in February it came back down through, and then you would sell because now it's going negative. But again it gave another positive entry point. The green went through. The price went through the moving average, and therefore here you go. It went above the moving average. You've got an entry point over here. You wouldn't have got another entry point right up until March the 29th. So the whole of February, the whole of March, and again it went through, back down, and again on the 7th of April or the 8th of April, it went back up through the moving average, and again you had another entry point. And you can see a simple technique of using a moving average as an entry to go in and out of the stock. Sometimes when it goes sideways, if the share is not trending up, you're going to be kicked out a number of times. You're going to be in and out of a number of times, and it becomes confusing as to whether you should be in it or not. That, unfortunately, is the problem with moving averages, is that when there's a sideways trend, it's not good to use a moving average. But as long as there's a trend in a share, it's a good thing. Let's go look, for example, Sasol. If you click Sasol, here is a bad example of the moving average continuously. The price is going through, up and down, through the moving average continuously, and therefore it's giving you false entry and exit points all the time. You can go and look through a number of shares. You can type MTN, for example. Again, that's a sideways move, a sideways trend. It's not going really up. It's neither going too much down. It's just going sideways. Let's go look at, for example, FSR, which stands for First Rand Bank. Again, it's sideways. If we had to go look at BHP Billiton, which is BIL, you can see here it's kind of trending up because the blue line is going up, but again the price keeps on falling through the simple moving average. But maybe I can increase my moving average and make it 50 here. Okay, it doesn't make it too much difference. One thing I'd like to point out to you is that you could use shorter time frames. You can change this figure at as much as you want. You could use, for example, a 15-day moving average with a 30-day, or let's put it, make it a 10 with a 30. and every time the red crosses through the moving average, you would buy the pink one, and when it crosses back down, you would jump out. Okay, here it gave another buy signal and gave you opportunity, but again, it went through the share price fell through the moving average, was a problem, but because it didn't cross over down, you didn't sell. Again, the red sometimes, and this is where you've got to be careful, is that this is a lagging indicator. And so what happens with a lagging indicator is that it basically gives you a signal, but it gives you a delayed signal, which can be a problem. Let's take away, we want to keep it easy. I want to show you, you can even use an EMA, which is exponential moving average, which I did show you. And again, every time the share goes through the moving average, you could buy over here. It's a much shorter one, and it gives you a nice increase in price. And again, when it fell, and again when it went up. If you looked at AGL with that, okay, this is very in and out because it keeps on bouncing. So you're going to see, what I like to do is like to play with the moving averages and see which one kind of suits that particular stock, okay? Because certain time frames might work better with certain stocks, okay? Again, if you wanted to use bar charts or candlesticks, you could change it and convert it into the different options. You have that option to do that here. And again, the time frame, how far back do you want to look? That's it for today. Please remember, follow us on Facebook and Twitter, because there we are making announcements when is our next webinar and things that are happening. And if you're wanting more information, you're welcome to go email us, schoolc@jsc.co.za, phone me on the telephone number there, or go to our website,